Hello everyone, welcome to the 10 University channel. So in this video, we're going to look at the pharma sector. The pharma sector has not been doing well for the last 2 years. It has been kind of outperforming the markets quite a bit actually. And off late, in the last few days at least, I've seen some strength coming back into the sector, and also I've seen some leading stocks, especially large caps like Sun Pharma, Cipla, actually doing quite well. And then when I went and looked at the other charts, I actually saw some interesting names. So I thought in today's video I'll cover the pharma outlook, the Nifty Pharma itself, and what the index is doing, and also I'll give you 4 pharma picks from the mid cap and small cap space. Okay, so yeah, let's jump into this Nifty Pharma outlook for today, and let's see what Nifty Pharma has in store. So here I have the weekly charts of Nifty Pharma, and actually post that breakout that we had in April 2020, we had a nice steep run, but then Nifty started underperforming the overall markets. And I think somewhere around the April 2020 was when we started underperforming, but we went high, but there was complete underperformance, and Nifty Pharma actually didn't do much since the last 2 years. But what has happened is this trend line kind of acted as support, and we saw this nice green candle over here. And since then, I did post about this somewhere in a couple of months back. I posted 2 stocks, Biocon and Granules as well. So we were somewhere around this point at that time, and now we kind of consolidating, and we have kind of had this cup and handle breakout over here. And today, I'm recording this video on the Monday. So actually, we had a decent breakout on Monday. Right now, whether it will sustain or not is something that we can guess. We'll have to see how it plays. But for now, we have made a higher high on the weekly charts. Right. So here we had the swing low around the April 2021. This swing low has not been broken. So for me, this is still a higher high, a higher low on the weekly charts. On the daily charts, obviously, this was a downtrend for the last 1.5 years. But for me, on the weekly charts, this is a definite higher high. And for me, this is also a channel, or you could also sort of call it a flag or a channel breakout. And we are probably heading higher now. Right. So for me, if you were to look at the next few months, pharma is definitely a space to be in. Some of the mid cap, small cap, and large caps might perform. You need to find the right stock. You need to find a perfect setup, and you need to take a trade. Now, if you find it very difficult, then I've made the job easier for you. I've already done a couple of videos, but in this video, I'm going to show you 4 stocks with stop losses and targets as well. So let's take a look at the first stock today, which is Eris Life Sciences. Now, Eris Life Sciences as a stock has been kind of going sideways since 2017. It was listed back in 2017 or 2016 December, I think, and since then the stock has not given returns. Right, so I have the fundamental or the financials here in front of me. So this company is in the mid cap space. It is around 10,000 crore market cap, so pretty decent sized company. And stock P is around 25.4, ROC is 25, and ROE also is around 23. So from a fundamental perspective, this is an excellent company. Probably it was the overvaluations during the IPO listing because of which stock did not perform, and the company is now probably ready to perform going forward, right? So looking at the shareholding pattern before we jump into the financials itself, the FIs have increased their stake from 10% to almost 15%. Now, in the last quarter, they have increased the stake from 13.3% to 15.3%. Now, that's a major increase in the overall stake this company is holding in Eris, right? And also, if you look here, the DI is also kind of reduced the stake, but again, they have increased the stake, and it's around the 10.66% stake is what they're holding in the company. And public has reduced the stake; they have come down to 21.6, so that has probably gone to DIs or FIs. Promoters have reduced the stake from 54 to 52. So overall, for me, the FI and the DI accumulation is a very positive sign, and probably that's what has been happening in the last couple of years because of its stock really went sideways, and now it's the perfect time for the stock to head higher. So coming to the financials or the annual results for the last few years. Now, this company was listed somewhere in 2017, which was when it had really good number of sales, around 750 crores in sales. And since then, the sales has almost doubled, right? So in the last 5 years, the sales has gone almost twice from 750 crores to almost 1400 crores. And the operating margin has kind of remained stable around the 36% mark. So for me, there has been many other pharma companies where operating margins were really fluctuating, but this is for me a stable operating margin. So for outlook in terms of the operating profits is pretty good. And also in terms of the PAT, we have almost doubled the PAT, not really doubled, but we've gone from 247 crores to almost 400 crores. So that's 12% CAGR in the last 3 years. In terms of the profit growth, and we've had 11% CAGR in terms of sales growth. So for me, it's an excellent company. It's just that the IPO, it was overvalued probably, and because of it, the stock did not perform well, and now it's going to perform really well. So let's take a look at the technicals now. So technicals, so here I have the monthly charts. So it was listed somewhere around 2017 of July, right? And then we had this massive move in the month of October, and the stock kind of went sideways. We did have a nice correction somewhere during the COVID, but then we had a nice breakout, somewhere around October 2021, and we had a nice move. But then since the stock has been, going sideways. Now, if you look at these long low wicks, that indicated that demand has been absorbed. So in the monthly charts in the last 8 months, demand has been completely absorbed, supply has been completely absorbed. And I think now we are probably heading higher. So this is probably the handle. So this is a major cup, and this is probably the handle that we are seeing. And if we break out above this major resistance, then we are going to see some really good returns in Eris Life Sciences in the coming quarters and coming years, right? So that's from a monthly chart perspective. Now let's deep dive into this area, into the weekly charts. So the weekly charts, if you see, this is a perfect channel for me because price has tested this middle of the channel multiple times, and then we had kind of a breakdown from the channel lower end. Then we kind of went sideways and we retested this channel this side, right? So this is a perfect long-term channel for me. And here, if you see, for the first time in the last 8 months, we are seeing a higher high on the weekly charts. Now remember, when we see higher high, that's clearly bullishness. Whatever the indicators or whatever other indicators are, if price is finally forming a higher high, which means stock is ready to head higher, right? So this for me is a clear breakout, and we are probably heading first towards 840, 850 levels from here, and then we might head to much higher levels. So what I do is, since if you don't have any allocation to pharma space, then probably it's time to allocate and try to allocate 5% to Eris Life Sciences and buy at current market price. We are around 730 levels. And keep a stop loss around 660. Now, you might ask where that is. That's around this weekly low over here, 660. So I'm being a bit aggressive over here. You might be conservative, and you can also keep a stop loss somewhere around here, right? But remember, if you get any dips around until 660, it's a very good point to add the stock. It's just a 12.5% stop loss. And I'm looking for targets of 1,000 or 1,300, right? So with a target of 1,000, it's 3 times the risk reward. And with a target of 1,300, I'm having a risk reward of 6 times the risk, right? So that's somewhere on the upper end of the channel, which is what I'm looking at, which is the point where you have to probably look at, booking some profits. If you want to add, then add on consolidation. For example, if the stock right now goes up, then it comes down and then it's head higher, then you probably want to add more at that point and increase allocation for Eris Life Sciences. So that's the first stock I wanted to cover today. So before I move on to other stocks, if you do like my analysis, don't forget to subscribe to my channel and don't forget to like this video. And also do a favor and share this video with your friends and family. A lot of people are struggling in markets, have lost a lot of money in the last couple of years when we started correcting. So let's help them make money and do share the video with your friends. Okay. So moving on to the second stock today is Glenmark. Now, Glenmark has been in a very strong downtrend since quite some time. So here I have the monthly charts in front of me. And this stock has been in a strong downtrend. The first time I spotted Glenmark was somewhere around that time when I said inverted head and shoulders breakout there, and we had a nice move until this previous swing high over here, right? But since then the stock has been going downside, and we have retested the previous breakout zone, which was somewhere around here, right? So, and if you see here also, I'm looking at dojis here and with long wicks. Now remember, whenever you see stock price, testing the previous support zone or around any support zone, and if it has dojis, now that's the first sign that the stock is actually, the supply is actually being reduced, and not much sellers are there because of its doji start forming like this. And since this is a monthly chart here, it took 4 months to absorb that supply, and now the stock is finally heading higher. Now, if you see that on daily charts, probably might take a few days, but it might not take as long as on monthly charts, right? So yeah, so this is how I spotted this stock, and this channel is now breaking out. So let's zoom on to this zone in the weekly chart and see what the price action is looking like. So in the weekly charts, again, this is a beautiful channel. This is a 5-month rectangle consolidation which is happening here. And for me, this stock, if it breaks out, it has now come out of the parallel channel. And if it breaks out of this zone over here, which is around 410 levels, then we might see some really good upsides, in this stock, which is first probably going to head here. And then we can probably head here also, and then probably make all times as well. Now, remember all the targets I'm discussing around the first target that I'm discussing, try to book some profits and then trail the remaining for target 2 and higher, right? So let's take a look at the stop loss and the entry. So you can enter current market price, which is around 400 odd. Keep a stop loss of 360, which is around, this zone over here. So here, this is the lowest point. So that's just around 10%. And I'm looking for targets of 700, which brings us to a risk reward of 7.5. And then I'm looking for targets of 1000. So 700, remember, is this swing high over here, which is 7 times the risk, 7.5 times the risk. And then I'm looking for targets of 1000, which is 15 times the risk. Now, this is probably one of the few stocks where I have such a high risk reward. I'm not sure if you'll get that, but definitely if you get around 700, that's much more than enough, and try to book some profits around that zone. Okay, so in Glenmark, I'm not discussing fundamentals because there's not much to discuss. The company has not been doing really great. So probably if the company starts announcing really good numbers coming quarters, do check it out, do keep a watch, and then try to add more if you want. Okay, so that's the second stock I want to discuss. The third stock we're going to discuss today is Granules. Now, Granules, I already posted this a couple of months back, or a month ago, on my YouTube channel and also on Twitter. We did catch this right at the bottom, where it was reversing around the primary trend line support. So we caught it somewhere around this month, 4 months back. So if you're not following me on Twitter, do follow me on Twitter, because I do post some ideas on Twitter regularly. Right, so here, so this stock reversed right from the primary trend line support. This was a beautiful long-term primary trend line support on the monthly charts. And here we had two dojis, which indicated that this stock is probably making a short-term bottom. And that's how I identify this stock. And then we had this follow-up breakthrough, and now we are also having a trendline breakout. Now let's zoom into this area and see what's going on in the weekly charts, so that you get a better perspective. Now, on the weekly charts, we had this stock made a high somewhere in November 2021, and then since then we've been going down, right? We've been correcting, but fundamentally there's nothing has changed in the company. The company is very good fundamentally, and you can take a look at it in screen or 10. I'm not going to cover the fundamentals for Glenmark, but this setup here is a very interesting setup for me. So this is an inverted head and shoulders bottom, and we have broken out last week, and now we are probably heading higher to much higher levels from here, probably into all-time highs and even new highs we might see in this next in this stock in the next couple of years or so, right? So this is a beautiful breakout. So what I do is buy the stock at current market price, which is around 345 levels. Keep a stop loss of 300, which is again just 3.5%. So most of my stocks have very small stop loss, even from investment perspective, right? And we're looking for targets of 445 or 680. And as always, allocate 5%. But if you do know markets very well, you can go with a high allocation as well. This is also FNO stock. So if you want to take intraday or short-term trades, you can keep the stock in your watch list and try to take trades, whenever it favors you. So that's the third stock I want to discuss. And the final stock that we're going to discuss today is Lupin, Pharmaceuticals. Now, in this, I'm going to cover fundamentals because I found some interesting numbers here. So I want to share it with you before I move to technicals. So this company, again, is a very small company. It's a small cap, 580 crores market cap. Look at the ROCE, right? ROCE is 24% and ROE is 17%, whereas the PE is just 8.7. So for me, this is a fantastic company. I feel this is really undervalued compared to what the company is generating returns for its capital. The PE is definitely undervalued. So I expect the stock at least trade around 20 PE and probably even higher, if the market does well going forward. So a few other points. Debt is down from 60 crores in 2018 to almost nil. So they have zero debt now. So that's a fantastic point from a fundamental perspective. Promoters have increased stake from 32% to 44% in June 2022. And in the last quarter alone, they have increased their stake by 2% in the company. So that's some significant accumulation by promoters. So probably they know something which is changing in the company. We'll also look at the financials shortly, but probably something that they know that we don't know, because of which they're accumulating very strongly, right? So let's take a look at the annual results starting 2015, right? So since 2015, so they were doing around 200 crore sales, but there was a sudden jump to 400 crore sales. So then I did a little deep dive into their financials. And what is read is they have started exporting to other countries as well, because of which the margins also started jumping here. If you see, the margins have also started improving, and the company is now doing around 470 crores sales. Now, considering this company, the sales is not really great. So they've not done a jump in sales like we saw in the very first stock. But what what made this stock really interesting is the operating margins here. So operating margins have almost gone from 10% to 20%. Now that's phenomenal for a small cap company. It also shows that the company has been looking at margins, which is the key parameter for a stock to perform, right? Now, in case the stock starts performing even in terms of sales, then we're going to simply see some really good profits coming in this company, right? So profits have jumped from 15 crores to almost 70 crores. Now, that's more than 4x jump in profits. Whereas the sales has not really jumped. So we just want some increase in sales, and this company can generate massive profits going forward. So profits have compounded by 13% or 20% CAGR in the last 5 years, and sales has compounded by a 9% CAGR in the last 3 years, right? So for me, The key reason that I'm looking at the stock is it's undervalued. The P is just 9 compared to the ROCE, and the operating margins are excellent. So we just want to uptick in sales, and this company might do well. So that's from a fundamental perspective. Now I know a lot of you have been tracking Lupin Pharmaceuticals, so do let me know if you have any inputs on the fundamental side. I'll be happy to learn and invest along with you. So this is the technicals of Lupin Pharma, right? So here I'm looking at the monthly charts. Always remember, monthly charts are very important to look at. I did a video on multi-time frame analysis, so if you don't know how to do it, do check that video out. It really helps you to do multi-time frame analysis, and it will help you find sweet spots where you can invest and immediately go into profits, right? So this was a massive breakout since 2016. We had a massive breakout somewhere around the May 2022, which is somewhere last year. This year on May 2022, and then we had this massive move up, and then the stock started going sideways, and we started correcting right along with the market. Now, remember, it hasn't corrected that much compared to a lot of other stocks which have corrected a lot. So also this wick around the zone, this is a breakout retest over here, and we are going sideways for the last 5 months or so, right? So for me, this stock, if it breaks out above this trend line here, then we're going to see an excellent move in the stock, Lupin. And if the company does really good sales, we're going to see a much higher returns coming in the stock. So zooming into that area that I just discussed. So this is the weekly charts, and if you see, we have lower wicks on the weekly charts. So there seems to be some really strong support around that zone. So for me, that's a low risk bet. So I'd probably buy the stock at this current market price of 290. Keep a stop loss 255, which is just 12%, and I'm going to look for targets of 400 and 650, right, as target 2. Now, if it's 400, it's 3 times the risk reward, and with 650, it's going to be around 10 times the risk reward. Now, this is an excellent setup from a small cap perspective. So if you do have some money still left, or if you're not allocated to any pharma stocks, this is probably a stock to consider from all the 4 stocks I picked up, because small caps do reward really well. But remember, the volatility is going to be huge, so do take care when it comes to risk management, right? So these are 4 stocks I want to discuss today. I'm sure you loved it. If you did love, as I said, do share with your family and friends. Otherwise, I'm going to leave you here. Take care, stay safe, and trade safe until I see you in another video. Bye-bye.